Good afternoon, everyone. BC Richfield here, coming to you live from London. It has just flicked midday here, which makes it 1100 UTC. A big shout out to everybody that's joining us live today and for everybody that's watching this on recording. Got a really interesting week coming up for news events again, so we are going to touch upon that before the end of the stream, and we're also going to obviously take our standard look at BTC, DXY, and we're also going to scan our eyes over ES and see if there's any confluence we can get from that this week. So I wanted to start with the weekly chart like normal. I've left the levels on there that we were discussing last week. This for me is capping the upside on this level. This has been a really significant level. We can see here as we ran into it as resistance. And this one we came up, took the liquidity, big sell side wick coming back in, pushed us back down towards the lows. Then when we did break out and close above here, we had this impulse move higher. But then we took out the liquidity above this high here and also these highs, causing this huge bearish engulfing candle to take us back down within this range. And as we know, when we're trading the range, what we're looking to do is trade to the far side of the range once we've got confirmed back within it. We ideally want to see a retest like we got here and then a sell-off. We do this via the 50 line, right? So what I would do here, obviously we trade it on a lower time frame, but I'm just going to take a fib. Okay. And then we can see here where our 50 line is here. So what we could see is as price comes down into this 50 line, this gives you a really good take profit level. We then get this underside retest, right? But then bullish action continues. We then sweep back into this range. So take out these highs, the liquidity above here. Then we sell off again with this big bearish engulfing candle. However, and by the way, guys, if you want to create this range fib, a few people have asked, I'm just using a traditional fib, turn everything off, but keep on the 0, 0.25, 0.5, 0.75, and 1, and you get yourself a nice little range Fibonacci there, okay? So we're going to turn that off for a moment to make that nice and clean. We're going to go into these other levels when we dive into the lower time frames. But on a weekly basis, what's making me feel that this could have been more of a tilt towards the bullish case? Well, actually, the predicament on this time frame is this, right? So what we want to look at is as price comes up in here, we sweep this liquidity, right? It's showing us there's a lot of sell pressure above there, a lot of sell pressure, and that's just pushing price, driving it back down. Now we've come back within this range, right? And we have now run the lows. So by the same principle, we would look to therefore come back within the range, which we did here, and then target bullish moves where to, as we said, the far side of the range, but always via our 50 line, right? So same range, same line, we can see we swept into it in this level here, all right? And obviously the rest is history as we then kind of sold back off. Now, what is very interesting here also are these three candles, right? These highs. So when we're looking at liquidity, what we can see here is we've taken out those highs, yeah? Price came into those, swept those and had a big sell-off. Now we've done the same with these highs, right? Which we can see has confluence from this kind of center line, which we're going to look at on the lower time frames. Let me just make that bigger. Right, so what does this mean in terms of our top-down analysis? So we're using our weekly as our high time frame bias, right? What we're saying is, okay, we've had this bullish reaction down here. We've swept the lows. Now we're continuing on. My main concern for the bearish case here is that we've now had this one sweep and then we've had this secondary sweep, right? Or in some terms, it's called a triple sweep. There's an amazing trader called Ape Durden, who's a very traditional price action trader, really top guy. If you haven't checked him out, very much must come from the traditional world as well. So I was introduced to him recently and saw a really good video he did on this, right? And it was, in traditional markets, typically taught on a weekly basis, right? As a reversal pattern, you take the liquidity of the first, you run this, and then you get this third push up, and then you normally get a fairly sizable sell-off. However, there's different ways to measure this move, and one of the most common is to take the range of the previous candle and target the 50% line. And again, that's where you're taking your profit. Obviously, you're holding some of your position in case you get a correction deeper. But that's kind of the basis of the theory. So that's what we're watching for in terms of price selling off. What else are we looking out for on this level? We always want to check B-Pro. And you see the bullish divergence that we had down here led to this really nice big move to the upside. And something else, actually. that we want to check out on here, or no, actually we're going to do this on the daily, sorry, is look at the 50 MA. So the last thing we're going to plug in is our RSI, and we got this very, very mild bullish divergence here, which has caused this move up. Now, obviously, as we know with divergences, guys, you've got to trade them with extra confidence. You don't just want to be running into them. But for me, coming into this key weekly level down here, running this liquidity was why we had more of a long bias over the last couple of weeks than short. But basically, we're just still within this range here, all right? So let's move on to the daily and see what we've got on the daily chart. Now, once again, as we can see with our key levels, once we're looking for our divergences, once we've got the confluence that we want to see, yeah, so we know we're coming into a key level here. This divergence allows us to trade this one here, and this one here, right? Really, really nice, simple trades. So again, we don't just want to trade these blind because you'd have taken this trade. Yeah, you might have got a scalp on a lower time frame. This one almost certainly would have got you stopped out. So when we're waiting for price to come into our levels, it gives us a higher probability setup. Now, what do we want to see on this time frame? So as we can see here, let me just zoom in a bit, where we've got the weekly open. Don't need that on there anymore. Where we've got the weekly open here. So in terms of seeing something from the bullish perspective, this here represents an order block, okay? So we're going to dive into this on the 4-hour chart, all right? And we're talking about where it changed momentum from a down move to an uptrend. And we're looking for that last down candle before the market moved higher, all right? And what our expectation is at that point is that there's going to be some orders in there. So we're going to do that on the 4-hour, but I've also got last week's low marked out here, and we've got the weekly open. So let's think about what we've got in terms of confluence here. So if price, as we can see, has dipped in here once, twice, this is the third time it's come into this order block, right? Now, normally you want to see a slightly stronger reaction when this happens, but in this instance, we're still holding the block here. So what would make me feel bullish about this? And we would need to dive down onto the lower time frame, but you would want to see a move back above the weekly open, all right? Now, before we go on to that and look at possible setups, let's take a quick look at our 50 period moving average here. Right, and what we can see here is this has been capping price really, really well along with our levels, yeah? So again, when price ran up into this level, being concerned about the daily 50 MA, we then come up, come above, deviate, have this huge sell-off back down. And in fact, we plow straight through this level here and we just go straight back into the lower part of the range. All right, we get our retest off of our SR level. And why this level? We'll look on a daily scale. From this high here, we can see price failed to close above 4 attempts. Then as soon as price is accepted, okay, we need to search for liquidity lower. Where has it gone to? It's gone down here to our weekly level, all right? So when prices come up here, run these highs, we can clearly see that the selling pressure is extreme up here. So this makes it a real key area of interest, right? We can also see the 50 period moving average here, the red line, and how that's suppressing price to the downside. So on a weekly scale, we're now just going to pop on our RSI as well, which isn't really telling us much. Yeah, it's been kind of flagging here under the 50 line, struggling. You know, it's showing momentum to the upside, higher highs, higher lows. But, you know, it's dipped up into the upper portion of this zone, and then it's just kind of come straight back again. However, we're going to look at traditional markets, DXY as well, in a moment, because as we know, they play such a huge role in towards risk assets like Bitcoin, right? So we've obviously got a lot of key news events coming up this week as well, which we'll cover towards the end. But just before we do that, let's take a look at possible setups that we could be looking at here on Bitcoin. Let me just turn the EMA off here. So what have we got? So we can see straight away, as we've been discussing here, that we've got these long tail wicks, yeah, heading into this order block, right, which is this down candle here. Perfect, beautiful order block. You know, we've got price coming down here, chopping around. We get this impulse move higher and this lovely big down candle leading to the move higher. Now, when you really start drilling into order block theory, what you want to see with order blocks is like this, where they're really, really clean. There's no wick taking the downside, taking this liquidity, right? So basically this has set the bottom. So what we're saying is there's a lot of buy orders in here that have led to this move going higher. Another thing I like to see on order blocks, especially on this kind of time frame, is when you do break out of them, you often get this almost perfect retest of the upper side, or if it's a breakdown of the lower side, right? So what would we be looking at here? If we're looking for bullish momentum, we're saying, okay, what do we want to see from price? Now, I do get concerned when price keeps coming back to an order block and we don't really make much progress, because it's often a sign that the buyers aren't really that willing to step in at that moment in time, all right? However, what I do like are the stacking bullish divergences. Yeah, we can see getting stronger every time, 9%, 36, and now 55. So for one setup, what I'd like to see in an ideal world, and I love using the RSI for this, I'd like to see the RSI push us a little bit lower down here into oversold and then start to make a move higher, right? At the same time, for price to kind of chop around in here a bit, right? I'd like to see us reclaim the weekly open, yeah? And then I think we could start getting involved with trades above here. We'd probably look for pullbacks to this level. All right, we'd want to see price above the weekly open, show us a bit of strength, take out these highs, all right, and then look for price to pull back here before then moving higher. And we've got a really, really clean target here. I think we'd want to be aware of any liquidity sat above these highs, right? But if we get ourselves a good entry here on a pullback on a lower time frame, then, you know, we'll probably have a good 2-3 R move up to this point, in which case we can flip our stops to entry and then target the high of the range, which is the red line. Now, what about the opposite? What if we're looking for short plays? Well, why I'm not too keen to step into this short at the moment is, right, we've taken out this low here, yeah? So we've swept the liquidity below there. So I think if we really drilled into the lower time frames and we had enough in terms of triggers, what you could wait for is if price now pushes back down into this area, yeah, and we get this retest here, I think if it sets up with a decent enough risk to reward on the lower time frames, that could be a scalp into last week's low. What would we expect at last week's low? Well, we would first of all be looking for a reaction to get back above it. If we did that, then we'd be looking for long plays up into this area here. However, if we break below it, then what we want to see is something like this. Price coming back down, we get that retest, yeah? And then we'd want to see the point that breaks it down. We'd want to see that close beneath, a retest of that area, and then we'd look to short it into the weekly lows, which are down over here, all right? So they're the setups that I'm waiting for at the moment. These tail side wicks down here, all right, they're giving me the feeling that there might be some bullish momentum moving here before a reversal, but we've got our targets, all right? We can see those nice and clearly, so we're going to wait, be patient and wait for price to come into our zones. So moving on from that, because we've got a few other bits and pieces, and if obviously if anybody does want to see any chart requests towards the end, please let me know. We're going to try and keep Monday's stream a little bit shorter unless we're doing some live trading as we build up towards the London-New York crossover. So no setups on that for me at the moment. Like I say, though, just to finish off on this, if I was to be looking to trade this here, one method that I do use quite a lot, and I'll just show you, is if we're looking for our liquidity sweeps. As we've said, as we come down and take this liquidity down here, what I would have been looking for is this liquidity run below this level, which is marked by the red line, coming onto our RSI, and we want to make sure we've got confluence with price here. We've not only got price down in oversold, we've got it in extreme oversold, right? This thing reached 11. Yeah, your extreme oversold is 20 and your oversold is 30, right? So that's had a really, really deep purge down there. So how would I look to get into this, scalping this? So I am 9 times out of 10, I wait for a bit of Monday's range to develop, but this was a very tempting trade this morning, and I'm just going to show you as for why. So we've obviously run a key level. We're down here on our 1 minute chart. How would we play this? Well, quite simply, we would be looking for one of two plays here, in my opinion. So we've taken out these lows here. Right, so what do we want to see to show bullish momentum? Well, we want to see the highs swept, the take and the low, which is here, for those of you that know my strategy, or one of my key strategies here, this is our breaker line. And we're quite simply setting our orders on this line here. Once price closes above, our stops go under the swing low. And then our first target would be into here. All right, I'd be looking for this up move before price sells off. So at that point, I'd be saying to myself, okay, I'm going to take some profit here and flip stops to entry. Next point, would be tracking this up towards the weekly open. All right, so I think that's the potential push-up play here. But like I say, it's not one to really get involved with now. That move, you know, you had to take that early to get the risk to reward on this trade as well, right? And also, something I want to cover with you guys very quickly, using a fantastic indicator built by a very good friend of mine and a fantastic trader from the Nest called Resume. His position size manager. Now, a lot of people message me asking about these trades, and one of the things you have to be really careful with your position size. So I want to have a fixed risk here, so I use an indicative $1,000 account, you know, to show there's more than enough money to build, to be successful, you know, in the market and start building a foundation. You know, you don't need to be using that crazy leverage, right? And, you know, $100,000 accounts. Right, so here we are again, set up on just on $1,000 account. Now, what we're saying here is, because the position sizing that we're dealing with is so small, I want my risk to be 2% of my account, right, which is $20. That dictates that this 0.29% stop here, yeah. So this is our risk. That means to hit those margins, my position size needs to be $6,630. All right. I could easily be getting $30 in fees, maybe more, right? Because your position size is large, right? So fine, if you hit far target and you pull yourself in $96, great, right? You know, you've got a really good risk to reward. But you've got to remember our keys here. Our key target is here, right? So now if we're doing the same with the position size calculation, we want to drag this down here. And let's just say we wanted to cash out the whole trade here. Well, our $38 profit might have been eaten up just by the position size, right? So make sure you check the asset, you know what the margin lending rate is on it, as well as the position size that you're entering, because it'll often be the case of why you will, while you go on trades that you trade on the lower time frames and you think, hang on, I should have had a load of good profit out of that trade. But, you know, unfortunately, you don't. So that's how I would have looked to play that. Either that, or, you know, you could look for a pullback to the fair value gap. All right. So again, you're waiting for your market structure break, which actually happens a little bit later. So you get your high, your low, break of this high here. All right. And then what you're doing is you're waiting for price to come back to your fair value gap. But what we do have here is a really nice clean upside target, and kind of moving away, retaking these highs here. I would expect us to push up into the weekly open. So, couple of things more to cross over, guys, before I let you crack on with your Monday and wish you all the best. Let's take a look at DXY. So I posted this chart this morning on Twitter. All right. So this is very much of interest here, because if we're starting to see strength or continued strength here from the dollar, then from the dollar index, sorry, then as this looks to push higher, you know, this is a key level for me. 113.641, all right, a real high time frame level that's offered a lot of confidence. Gave us this rejection here, where we can see we came above, turns out to be a deviation. We ran the liquidities above the high before selling off, retesting it here, and then continuing the sell-off. Now, in terms of scenarios, well, actually saying that, the other thing that I'm looking for here, and always look for, if this is the key liquidity line here, right? So that's the low that swept the high, price closed below this, retested it, and then we had this big sell-off. Well, this right here has to be a point of interest, right? We've now tagged this, I would say, probably to the dollar. So what was the low? 113.332, and what was the high here? 113.310. So there you go, almost to the dollar, right? But we've got a key level here. In terms of it being good news for risk, we would want to see these run, yeah? Something like this, right? And this is where we would then look to get involved, okay, with any shorts. So we want to see price run these levels, fail to close above this high, yeah? Then we'd say to ourselves, okay, if price comes back down, once it closes below the low that sweeps the higher, right? then we can have some setups here. But again, we would want to see them on the lower time frame. So we want to have an eye on the DXY today as well, because if this thing starts to run hot, risk is going to suffer. However, if we get any kind of pullback or any kind of sustained correction, then it's going to be really good news for risk. So let's have a very quick look at ES as well. See how we're doing here. We can see some squiggles on the chart still from last week. So this is what we're looking at. We're looking for price to run into these lows down here. Although something that's definitely worth considering here, if this is going to get bullish at the moment, is finding the order block that sits in here, which will be on one of the lower time frames. All right, because we've clearly come into an area and found some kind of bullish reaction. However, we can see from the squiggle down here that we did last week, we want to see this drive maybe a little bit lower, take out these lows, close back above these highs, and then we would look at these higher time frame levels here, probably wait for a microstructure to build inside this, show that we've got acceptance before moving up. Looking then, as we move higher, right, we would want to look then at the breakdown from this area here, right? So we had this up move here that led to the sell-off. So we say to ourselves, okay, taking it from the volume body of the candle, which is there. All right, taking that line along, we can see what happened when we lost this level, came back, retested it perfectly, gave us enough real bearish momentum to really, really drive down lower. So bear with me for a second, because there's a few bits and pieces that I think it's worthwhile us covering off today. So what we got on here, let me share this with you guys. So some news events that we got coming up. Really good friend of mine, a very good friend of ours, the Nest, and just a fantastic human being, JJ Cycles, reminded me as well that we've missed out earnings on here as well. So please do be aware of that. We're going to get that amended and get that back out. He is a macro legend. So when macro legends like that speak, you want to listen. Obviously, you validate it, check for yourself, find out why you've missed it, and then you want to add it. But nobody's perfect in this world, especially me. So, but these are really, really, really key news events, right? So let me share this across with you. As we saw last week, right, when we got a lot of key news events happening, it can bring a lot of instability. So here we go, guys. So as we go on here, we've got Bank of England Governor Bailey speaking tomorrow. That can always have an effect on the markets as well. We've got GDP, PPI, FOMC meeting minutes. So the 12th is going to be absolutely fun-packed. 13th, we've got CPI. And then as we can see, as we go down here, we've got core retail sales incoming on the 14th, retail sales both month on month. And then we close back down into the week, all the way down here on the 14th with prelim UOM consumer sentiment report. Okay, that always has the ability to move the market. And then we're back in on the 15th here again with Bailey speaking once more. So in terms of the key events we got coming up this week, we can see there's a lot of potential for volatility. Okay, so look, guys, thank you very much for joining the stream today. Have a fantastic week. I'm going to be live on Wednesday. We're going to be broadcasting out across YouTube, Twitter, Instagram as well. So hope to have a few hundred people on that. So do bring your alt requests and bits and pieces with you if there's anything else you'd like to know about the strategy. Have yourselves an amazing week, and I look forward to catching you all around the next.